And now, here's your host, Jason Hartman, with the complete solution for real estate investors.
Jason Hartman, why don't you talk to us a little bit about how individuals can prepare themselves for inflation or deflation, or what that looks like?
Lynette alluded to, unless they create other tools, right? Which was an interesting statement. And, the basic blunt tools they have now are they control, the money supply, the interest rate, the cost of money. Those are very blunt tools. They're not very concise, if you will. And so we are now in a situation where they have hidden inflation, a lot of it that has been in the system for decades, by not controlling the southern border and importing cheap labor from Mexico. And they're definitely not controlling it now. And that is a way to hide inflation, by importing cheap labor. And of course, importing cheap goods from China and other places, but mostly China, of course, the workshop of the world. And now we see some strange situations in a lot of these things. And I just think that in a world like this, as we've seen throughout history, whether we study Hungary, Zimbabwe, Argentina, Weimar Germany, whatever inflationary story you want to pick, people always did one thing. And I just finished an Alaskan cruise, and one of the crew members who I was talking to there, on her badge, it said she was from Zimbabwe. And I asked her about what Zimbabwe was like during those inflationary periods. And she said, basically, the whole economy just came to a stop. It just came to a halt. You couldn't do anything very effectively. And what people need to is trade their devaluing currency, those pieces of paper with dead presidents on, for things, because things have intrinsic value and currency units do not have intrinsic value. Now, we all might disagree on the thing you should trade it for, but you should trade it for something. And people want to be trading their currency for things that have intrinsic value, that are traded globally, that are not attached to any particular currency unit. And things have intrinsic value, currency units have fluctuating value. And so that's what I'd say about that. Now, unlike Lynette, I am not a gold bug. I think gold's okay. I certainly own a decent amount of it. I own all the precious metals, but those have historically great store of value. I lean toward things like housing, and because housing is just made of commodities, it's made of lumber, it's made of concrete, it's made of copper wire in the walls, and petroleum products, and all of these things that are traded globally, not attached to any one currency, have intrinsic value, and every person on earth needs them. And so that's what I'd say. Trade your devaluing currency units for things that have intrinsic value. But here's the real question. It's not how well or how poorly will real estate do. The real question comes in the form of an acronym, and it's a woman's name. It's TINA, T-I-N-A. And this is something everybody needs to think about. TINA stands for there is no alternative. Because one thing we know for sure is that if we put our money in the bank, we are going to lose. That is a sure loser, bar none, no questions about it. I doubt anybody will disagree with that. Okay. Right now, you're going to lose 9.1% per year officially. So if you got $1 million to play with, you're losing $91,000 a year on your bank balance. If you put it in real estate and you only make 10% all in, now I don't mean an appreciation. Real estate's a multidimensional asset class. You get cash flow, you get tax benefits, you get inflation-induced debt destruction, you get all of these multi-dimensional things, mortgage pay down, even if the property is not appreciating in value, or even if it's only appreciating in a small way, as long as you use proper leverage.